Hi, I'm Dave Littell, and I'm here with Jeff Levine, and we're going to talk about incorporating tax planning into a retirement income practice. So, Jeff, you're a CPA, right?
Yes.
You're the perfect
Guilty.
person. You're the perfect person to ask this question. If I'm a retirement income planner, I'm a financial advisor doing retirement income planning. How important is it for me to make sure my client's getting good tax advice in retirement?
I think it's absolutely critical. You look at what you can control in this world, and there's not a lot. But when you do good tax planning, there's an immediate benefit. So the client actually benefits, but so does the advisor, because there's a real value that you can show. When it comes to the markets, if you invest in the wrong thing, if you hold on to it long enough, sometimes it'll come back. You buy something, it just happens to have a bad month or a bad year. You hold on to it long enough, all in all, things tend to to even themselves out. But when you miss out on a tax strategy that you could have used, or you missed a deduction or something like that, then there's never a knock at your door 5 years later from Uncle Sam saying, hey, you did this, you missed this valuable tax benefit or strategy, here's some money back on behalf of us. So it's gone forever. So it makes actually a tax mistake in some cases worse than an investment mistake.
Okay, so it's important. So now here's the tricky part. How do you incorporate this in your practice? You're hearing your compliance department say, you're not a tax advisor.
Sure.
So what do you suggest? What are ways that you can build this into your practice efficiently?
So you could really span the spectrum, right? So for those that really want to get into this, hey, go out there. You can become a CPA, or you could become like an enrolled agent. That's another angle to come in here as a tax professional to be able to legitimately give tax advice. Now, obviously, you always want to follow your compliance department's protocols, but I've worked with a lot of compliance departments over the years on these type of issues, and pretty much universally, it's understood that there's a difference between tax education and tax advice. And advisors are able to dispense tax education fairly freely. It's that advice that really can become a little bit of a tricky point or a sticking point. And that's where you really want to rely on your compliance department to tell you what crosses the line. Because to me as an advisor, as a tax person, I look and I say, well, pretty much everything you do is tax advice. When you tell a client that they should take at least $5,000 from their IRA this year because that's their RMD, well, is it education? Are you kind of just telling them a rule? Or is it advice? Because maybe they should take it from another account, a different IRA. Or, if you have a scenario where the client is over 70.5, they're taking RMDs, why didn't you tell them to use a QCD as opposed to just take the RMD and cash? So anything we do really has a tax consequence. Buying an investment in a taxable account, selling an investment in a taxable account, opening a traditional IRA versus opening a Roth IRA, versus should you convert, should you not convert. There are all these things. And so, you asked a very important question, which is, someone wants to incorporate this. They see the value of tax planning, which, studies have shown create sticky clients. Clients, and especially the higher income you are, the more income you have, the more you don't like taxes.
Right.
So you're kind of on the same side as the client, right? Everybody doesn't want to have higher taxes. You want to keep them low. And so the first thing is to make sure that you really understand the client's tax picture. Break down their tax return. It's amazing how many advisors I talk to and I say, well, when was the last time you looked at the client's tax return? They say never. Say, how could you not look, even if you're not a tax professional, how do you not look at the client's tax return each year and get an idea of what's going on? What are their other income sources? First off, it's good for you because you find out a lot of stuff about people looking at their tax return. But more than that, you get a sense of whether their income is likely to increase later on or decrease later on. Should you be looking at things like Roth conversions or not? So, making sure you get the right information is critical, and that starts with the tax return. Mm-hmm. And then going forward from there, there are lots of software programs out there that people can use, and some of them are more complicated, some of them are a little bit simpler. Advisors can choose, which is right for them. Obviously, as a CPA, I kind of have a very robust software at my disposal at all times so that I can do complex tax calculations. But for a regular advisor, when I say a regular advisor, I mean someone who's not a tax professional, who's only really interested in being the financial advisor and just wants to at least educate the client on some tax things. They may want a much more simplified program simply to illustrate some concepts to the client and not necessarily to give the client more precise values. They can leave that up to the tax professional, which is kind of the third key here, right, is building out your team, making sure that you have that holistic approach. Because if you're not going to give the tax advice, you want to make sure that you're working with a CPA who's friendly and will. Because if not, there's a CPA out there who's also a financial planner who's going to come and eat your lunch one of these days.
Right.
More and more CPAs are getting into the financial planning space, and the AICPA has made a big push to push the PFP, or Personal Financial Planning Department or Division, the PFS, the Personal Financial Planning Specialist designation. So they're looking to see CPAs, the trusted advisor in many instances, to expand their influence. So you really want to solidify that relationship with the client and insulate yourself by building out your team.
So if tax advice is so important and you're a financial advisor, well, one, if you get educated, that's important. I mean, so also you can even evaluate the other advisors. I mean, if you understand the rules, you can understand whether your clients are getting good tax advice from their tax preparer. Some tax preparers are good at this and other ones aren't, right? So
I'm so glad you just brought that up.
Yeah.
Because really, tax preparation and tax advice, or tax planning, as I might rephrase it, are two very distinct jobs. And sometimes the same person will do both, but oftentimes they might be done by two different people or two different organizations or whatnot. The preparation is really looking historically and saying, what happened? Let's report this income, let's report the deductions in a way that's appropriate, give this information to Uncle Sam, and let the chips fall where they may. Whereas the tax planning really is what keeps that number lower in the future. And to the extent that if your client only meets with their CPA during tax season, or only speaks to their CPA during tax season, which is the case for a lot of people, they're probably not getting tax planning. Because I can tell you, having previously for many years been in the muck of tax season, there's no time for anything. You're just literally cranking out returns for most people, and you don't have the time to dedicate to the evaluation and the planning that could take place. So that's a really good indication right there. If there's no other communication or meetings taking place throughout the year, your client is probably not working with a tax planner, just a tax preparer.
How does a financial advisor sort of meddle in this without causing more trouble than maybe it's worth? I mean, how do they help?
Carefully. Carefully. I would always, you can certainly talk with, the CPA and ask them questions. And I like to, sometimes I find that the advisors, that I've worked with in the past, they often are a little bit, more savvy when it comes to some of the planning aspects than their client CPAs at times. And so you have to be very cautious about that, and tread lightly, because you don't want to upset that other person or push them away. So sometimes I think it's helpful to just simply ask them, hey, this is what we were thinking, what are your thoughts? Or what do you think? Like that framing at the end is absolutely critical. The simple addition at the end of a sentence of what do you think or what are your thoughts completely brings the guard down of that other professional, whether it's a CPA or an attorney. It's just any other professional you might be dealing with who you don't want to look like you're controlling them in their space. That pushing it back to them and asking for their opinion. Look, if you just danced around a topic and you know it way better than them, they're going to look and say, yeah, what you just said, I agree with you.
If they don't know anything
That's
about
right.
it.
If they don't know any better, they're going to just say, yeah, I think you're right. And if they have another opinion, they'll give it to you. But in either case, you've probably kept a pretty good relationship with that person, because you're not, you're not looking like you're trying to put them down or belittle them. And the other thing I would also encourage people to is that if they're going to have these conversations with the professionals, where sometimes maybe there's a disagreement or difference of opinion, do it without the client there. Don't have because once the client's there, then everybody's got to save face. They have to make it look like they were always right the whole time. If the client's not there, tends to go much better. And we just, this is how we came to the decision. At the end of the day, it's about getting the client the best advice possible, and that's usually done with a team approach.
Yeah, that's really helpful. Thanks.
Thank you.